Georgina, the fate of both these companies tied very much, particularly to the price of iron ore. What's your outlook for the coming month there, or the coming year, rather?
Yeah, good morning, Paul. Thanks for having me on the show this morning. So UBS sees another strong year for the iron ore market. Our forecast price for 2021 is a US $125 a tonne, and this is off the back of continuing strength in China and rest of world recovery. As you pointed out, it's been a very strong second half calendar year for the miners, with iron ore lifting from an average in the first half of $91 a tonne to $126 in the second half. So this should drive very strong results. But as you pointed out, Tuesday and Wednesday are big days for the miners.
Yeah, what sort of dividend payout do you expect from BHP and Rio? Something that would surprise the market.
Yeah, so I think something worth thinking about is that we're going into two very different sets of results. So for BHP, this is an interim result with an existing CEO that's been on seat for over a year now. We're looking at a dividend of 91 US cents with a payout ratio of approximately 70%. Whereas for Rio, this is a full year result. We've got a new CEO. We're coming back from what has been a turbulent year in 2020 for the company. So we're looking at US $3.70 per share, so a 77% payout ratio. Both the miners have very clear dividend policies, which we expect these to be in line with. We're not expecting any special dividends. We're not expecting any restarts of buybacks, but we are expecting a solid payback to investors.
What will investors be watching when it comes to that scrutiny, regulatory scrutiny? We've had a couple of scandals for both companies last year.
Yeah, so it's like I said, it's an interesting time for the miners. BHP has the benefit of having Mike Henry on seat for over a year now. He's been very clear with the vision that he's got for the company and the transition that he's moving towards more future-focused commodities, a greater embedding of technology within the way that the company undertakes its operations. But we do have this overhang around Jansen. Investors very interested to see what the movement going forward there is. For Rio, everyone's well aware of the turbulent year that Rio had, almost unprecedented in what unfolded. And with the new CEO, Jakob Stausholm, there's a long way for him to go with rebuilding relationships in Western Australia with traditional owners, and also, trust with the community there. But we've already seen him outlining his changes with the management changes that were announced last month. So we've seen a chief executive appointed for Australia. We've got the new chief executive for iron ore in Simon Trott announced. So he's very clear about the leadership team that he's got going forward in Australia to rebuild those relationships. But it's definitely put all the miners on edge in Western Australia.
So when it comes to the commodities outlook, are there any risks on the supply side? And say, in particular, when it comes to iron ore, what equity exposures would actually be best for iron ore?
So, for so much of the global recovery, it's around the vaccine rollout, right, and around the shutdowns that could potentially occur globally as mobility returns. Iron ore really benefited from the strength of China, but the future growth is also premised on rest of world mobility returning, return of Europe, return of Southeast Asia to continue to fuel that growth. So the risk is all around, the vaccine effectiveness, the vaccine rollout, and additional lockdowns. We saw 2 weeks ago in Western Australia that there was a snap lockdown because of a COVID concern, and that saw, risk to iron ore output from some of the miners, some of the more junior miners in WA. So we're very cognizant of the impact of that. In terms of playing iron ore, you've got the big traditional players in BHP in Rio. If you want pure play, you've got Fortescue, though their pivot to the Fortescue Future Industries is showing that they're looking to diversify their business long term. And then also another interesting way to play it is through Mineral Resources with its growing iron ore portfolio and its growth projects.
Just want to get your thoughts on Australia's second most important commodity as well, coal. We've got a lot of power plants being retired in Australia or reaching the end of their life. China, of course, not taking Australian coal cargoes at the moment. What's your outlook for that commodity?
So the benefit, the fortunes of coal again is really tied to this rest of world recovery this year. So we've already seen, with the ongoing tensions with China last year, that was huge disruptions to the Australian coal miners. But fortunately, a number of Australian producers had already diversified away from China. So they're really focused, and their growth will be predicated on the continuing return of activity in Southeast Asia. So again, that risk of re-emergence of COVID, lockdowns, etc., will be a risk to that. It's also worth noting, this gets talked about a lot, but we're also in a La Nina year, right? So that's going to have an impact on supply. We've already seen that in Australia, coal exports were down. I think it was 12% year on year in January due to weather disruptions. So it's an interesting year in terms of balancing the supply side with weather-related impacts that are going to impact not only coal, but also iron ore from the big producers out of Brazil, Australia and South Africa, but then also, what happens to that rest of world recovery as Australian coal producers diversify away from China to protect themselves from any ongoing risks there.